Welcome to the Money and Wealth Show, brought to you this week by American Manganese Incorporated. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, the show about market opinions. And this week, it's a real pleasure to welcome our guest, the Chief Investment Officer with the Energy Division of Casey Research, Marin Katusa. Welcome to the Money and Wealth Show, sir.
Thank you for having me.
It's a pleasure to have you with us. Now, you've got an interesting background that I really want to take a moment and let our viewers understand or get to know you a little bit, because you're a former mathematics professor, a calculus professor at Simon Fraser University in Vancouver, who took and leaped the bridge to the private sector and landed in energy research. Connect those dots for us.
So I started as a high school math teacher, teaching grade 12 physics, grade 12 math for the provincial exams. Then I got into marking the provincial exams with the Ministry of Education and started doing review sessions for the calculus exams up at SFU for the students. And I started doing that for first and second year calculus. During that time, I met Doug Casey, and then he brought me over into the finance world and the newsletter and investment advice business.
Well, of course, a lot of the world of investment and the markets is about numbers, and as a guy who has a tremendous aptitude for crunching numbers, it was a pretty, I suppose, fairly easy transition to make.
Well, the key what I did, I'm not a geologist, so I partnered up with a professor from UBC named Dr. Mark Buston. He would take care of all of the geology. I would take care of all of the numbers. So that's what we did for the last 4.5, 5 years. So I'd go, Dr. Buston, you do all the geology, I'll do all the numbers, and if the two pass the test, we'd recommend it and invest in it.
And as Chief Investment Officer with the Energy Division of Casey Research, you oversee a staff of 40 plus people who are very busy publishing newsletters for a global subscriber list, right?
That's right. All around the world. I've been in Kuwait and Iraq where people said they'd come to our conferences and see, hey, I'm a subscriber in Romania, all across the world.
Now, what differences do you notice in terms of audiences who go to these conferences and gatherings from North America? And you've just mentioned various international spots. What's the big difference between folks who show up in other parts of the world?
The number one difference I've noticed in North America, they're generally my parents' generation. Elsewhere in Asia, in the Middle East, in Europe, they're generally between 25 to 45. It's a higher educated people who want to improve their lifestyle. But in North America, I've noticed that if you go to the mining shows, you go to PDAC, the Cambridge House shows, they're generally more white-haired individuals in the crowd, versus when you go to China, it's younger, energetic investors.
Well, you're doing a very good job of making white-haired people in North America not feel too badly about things, and I appreciate that. But why do you think it is? Why does it take North Americans, seemingly at least, a little bit longer to kind of catch on to the game and want to play?
Well, I think also because life is pretty good in North America. They get educated, their parents have done well, they don't have that eye of the tiger. Whereas if you go to Eastern Europe or you go to Asia or the Middle East, look what's going on. You've got this educated, what would be by our standards, poor class, and they want more. They're just as educated. Mm-hmm. They can do just the same type of computer programming, whether in Silicon Valley or India, but they get paid 1/50th the price. So they want to get better, and there's no better industry in the world of wealth creation than the junior mining and energy investing, the junior TSX venture. There's no better wealth creation in the world.
Well, now this is one of 4 predictions that I'm going to get you to elaborate on that you made just a few weeks ago as part of the Casey Research 2011 Outlook. But you've also got another personal project on board in your life, Marin, that I think people would really appreciate hearing about, especially British Columbians who are fond of our mining history, and all of us know something about the big copper mine in Princeton. Now there's a lot more to know. Tell us about it.
Well, it's been a long project. I came across it because of an individual named Jim O'Rourke, who is just an outstanding individual, and he's been involved with this mine for many, many decades. The Copper Mountain Mine, which used to be called the Princeton Mine,
right.
We're now bringing it back to life, as many people said. It was on the front page of the Globe and Mail. But the benefits to BC is just thousands of jobs indirectly and directly. And it's great to see because with what happened to prosperity, the global investment think that BC is a difficult place to do business. Copper Mountain has proved that with the right people and the right project, BC is open for business.
Now, this mine effectively went dormant about, 25 years ago, maybe a little more recently?
1996 was the last year it produced, and that was because of the spot price of copper got down so low that it wasn't worth investing in to upgrade the infrastructure within the mine. Now, in 2006, with Jim O'Rourke and Rod Shire leading and being the force behind it, they believed that you could increase the resources, and with larger mining equipment and modern technology, that this would be a profitable mine. And their business plan has been executed perfectly.
So that's a happy combination of better mining practices, better technology, and of course, better world prices for the commodity, right?
And most importantly, I cannot emphasize enough, the most important thing in investing is investing in good people. And that is the key. You know, Rick Rule has this saying, who's a very famous individual in the junior mining sector, great people could fix average rocks, but average people can mess up great rocks.
So the point is, all of the combination of world prices and technology and all the rest of it can't really make it happen until you add the skill sets of talented, capable people.
And at Casey Research, we have something called the 8 Ps. The first P is people. That is the most important element to any successful venture.
Our guest this week on the Money and Wealth Show is Marin Katusa, Chief Investment Officer with Casey Energy Research. Lots more still to come. Stay with us.
Always consult your investment professional before making any investment decision.
American Manganese Inc. has a world-class deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's Sterling.
Welcome back to the Money and Wealth Show. Our special guest this week is Marin Katusa, who is the Chief Investment Officer with the Energy Division of Casey Research. And Marin, you were also telling us about this Copper Mountain project in Princeton, British Columbia, of which you are a founding director and shareholder in the interest of full disclosure, correct?
And acting director still.
Okay.
Yes.
But this is an exciting project. This is a dormant mine, well known to most British Columbians as the huge hole in the ground just outside Princeton in the interior that's now active again. And one of the reasons is technology. And one of your bold predictions that you made with the Casey Energy team for 2011 is that new North American technologies will be applied all over the world, including, of course, right here in North America and right here in Princeton, BC.
Well, very correctly, and the biggest success in the energy has been unconventional technology.
Right.
And it's been for about 10 to 12 years very successful, and that's why the gas prices are low right now, because they're almost a victim of their own success. They've been so successful that not only are all the onshore supplies full, they're not even tapping into these wells. They're not completing them because they know they have so much supply backlogged. But now what's going on in Europe right now, the biggest rush is taking this unconventional technology and applying it to the shale oil and gas potential in Europe, so Europe relies less on Russian natural gas. So it's a political thing. And moving forward, between now and let's say 24 months, the biggest movement is taking that proven unconventional technology to the best source rock in the world, which is in the Middle East. So you'll see companies like Saudi Aramco making announcements, and the smart companies with the experts in this business will be going into the Middle East and signing deals with local partners, because the most difficult thing to do business in a foreign country for a North American company is you have to have a solid foreign partner, whether it's government or an established large company operating in the country.
And that's whether it's Saudi Arabia or China or wherever, right?
Whether it's Egypt, Syria, Kuwait. I just got back from Kuwait. You know, these wells have been producing the same way for over 60 years.
Sure.
They have not seen any unconventional enhancements, but these are getting tired. And if you go to Kuwait, something like 94% of all the revenue comes from the oil exports. The other 6 come from investing that money. So, this is a place completely dependent on oil.
Right.
And this is perfect technology for the North American companies and for your viewers to invest in the companies early before they have that success in the Middle East.
And the companies are not themselves oil companies or petro companies. These are technology companies that supply, drilling specific technology to the petro sector.
Well, it starts with the individuals. It's going to be the geologists who've had success with unconventional technology. It's a frack. So you're going to have frack equipment. It's very expensive to drill one of these wells. If you go in North America, you're looking at anywhere between $2 to $4 million per frack. In Europe, it's costing between 8 to 12 because there's only about a handful of frack sets in Europe. In the Middle East, they don't have these yet.
Oh, okay.
So it's going to be junior energy companies with a management team that have executed this plan before. So you want to stick with the innovators. See, I have this theory about there's innovators in the business, there's imitators, and there's hot dog vendors. You want to stay away from the hot dog vendors who sell you bad meat and the imitators, and stick with the innovators who have proven track records of success.
And of these new technology companies that are able to provide this incredible new drilling asset to non-existent places like, or at least where the technology doesn't exist,
That's
like
right.
the Middle East, are these Canadian companies, American companies, or multinationals?
The interesting thing about how the business works, it's going to be these junior companies listed on the TSX Venture.
Okay.
The bigger companies are so between bureaucratic blue tape and all of the infrastructure they have, it's these fast-moving junior companies that can jump on a plane and get there within a day and a half without waiting for a month and a half before you go through all of the levels of your bureaucratic steps. It's going to be these junior companies listed on the TSX Venture.
Okay, now if I'm going to do a Google search and find out who some of these up-and-coming young Canadian technology companies are, what do I enter in my search engine? What kind of names and technology am I looking for?
What you're going to want to look for if you go into Google or if you go to these conferences, what type of proven track record do they have in unconventional fracking? That's the tagline.
F-R-A-C-K?
F-R-A-C.
Okay.
Yeah, it's kind of an odd word. It's an oil and gas terminology. And you want to be able to also, do they have access to these frack sets? So it's great to have a technology, but if you can't apply it.
Well, here in North America, we've been hearing about shale deposits and
right.
the extraction of oil from these deposits in a North American context, specifically talking a lot about the Rocky Mountains in Colorado, specifically. But we haven't heard a great deal about the companies that do the extraction and the fact that there isn't similar technology elsewhere on the planet.
Well, that's just it. It's a American innovation. And most of the geologists have stuck to the U.S., and now it's expanded to Europe first, and it's starting. The innovators are starting to do it in Europe. And the key thing for investors to understand is the biggest thing going against the unconventional technologies is the massive use of water. So if you go to the Marcellus Shale right now, there's a lot of protests going on because each one of these fracks require 2 to 5 million gallons of water. So it's important to understand.
Is that a higher degree of usage than the extraction techniques currently at play in the oil sands?
Yes.
They even use more water in the fracking? Then?
Well, the oil sands uses roughly a ratio of 2 to 1. So it will be higher than the oil sands. But the oil sands depends if you're talking conventional, open pit, or unconventional, how they do like SAGD. So there's 2 types of extraction in the Canadian oil sands. And most of what people realize is, unfortunately, again, this is a great Canadian technology, when people are against the Canadian oil sands, but over 70% of the Canadian oil sands comes from SAGD. Everyone talks about these massive open pits.
Sure.
They are large, but most of the production comes from SAGD.
Which is the deep down extraction
right.
process with the heating and the steam and all of that.
That's right. Steam-assisted gravity drainage, it's called.
All right. Our special guest this week is Marin Katusa from Casey Energy Research with some bold predictions yet ahead for 2011. Stay with us. We'll be right back.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's Sterling.
Welcome back to the Money and Wealth Show. Our special guest this week is the Chief Investment Officer with the Energy Division of KC Research. Marin Katusa is with us. And Marin, your company and your gang there at KC Energy Research issued a few bold predictions for 2011, 4 to be exact, and I'd like to just whistle through them with you for your comment. Number one, crude oil prices will be mostly sideways in 2011. Not a lot of ups or downs. Why?
The main reason is there's something called the golden price of oil. And in the Middle East, $90 oil is very good for them. If it was $150 oil, there'll be a lot of money coming in for exploration, and it may contend with their stranglehold on the market. At $150 oil, people might try wildcatting in Africa, elsewhere, deep offshore. So $90 oil keeps away the amount of new exploration.
Okay.
But $90 oil makes them balance their lifestyles, their political agendas, their investments. So $90 oil is a perfect place. And also, people talk about something called peak oil. Well, peak oil will be challenged by the new unconventional technologies and the success these technologies have had. So $90 oil is where we see it moving sideways for the next 6 months.
So these frack companies and the technology of extraction called fracking will keep the supply at a much more consistent level, which ultimately then keeps prices more consistent.
Correct. They have these decline curves, but they keep drilling these wells, and it's like a sponge. They keep sucking out the gas out of these, and that's why gas has been suppressed in North America.
Okay.
And you'll see a continuation of that with oil also. Long term, though, as these successful and huge deposits in the Middle East, we call them elephant deposits, tire, you'll see an increase in oil prices unless they bring these modern North American companies to do the unconventional technologies. So you'll see it going sideways in the near term, and in the longer trend, we do believe in longer price oil, higher.
Okay, prediction number 2, large cap stocks will be better than small cap stocks. I'm assuming that's a performance in the bank accounts of those who hold shares.
You have to ask yourself, what type of investor are you? If you're a passive investor who spends less time in their investing than they do in their sports action, then you have to ask yourself, I better invest in these lower risk, big oil companies. But be careful. A lot of the new trend, the biggest scam in the business right now that nobody is talking about are these big oil companies buying up gas deposits and gas companies and booking them as barrels of oil equivalent. You see, it's a 6-to-1 ratio on energy, but the price on top of that is a 3.5. So they'll get an extra 3.5 times currency or price value for these gas deposits that aren't really there. So if your viewers buy a large cap oil company, make sure you ask yourself, what's the percentage of oil versus gas? Because not all barrels of oil equivalent are equal.
Are most major petro players in both natural gas and oil?
Yes, they are.
Okay. So then it becomes the ratio of how much is oil in the operation versus natural gas, and what sort of equivalencies are they trying to make?
Exactly. So right now, because natural gas in North America is at such a large supply, they're flaring these gas wells out just to suck out the oil. The gas is irrelevant to them in the economics. So now if you're booking it as equal, you could be in a lot of trouble.
Prediction number 3, energy as a sector will end the year ahead. And that's the entire, from uranium to oil and beyond.
You know, people forget that uranium's been a better yellow metal than gold. It increased over 40% in 2010. Gold was at, 28? So it's increased at a larger pace than gold. And the interesting thing is, we both travel around the world a lot. You look at India, you look at China, you look at Brazil, you look at Europe. They need security in energy. And for their economies to grow, they need a safe supply of energy, because your growth of your GDP is directly correlated to your energy consumption.
And that dovetails nicely into prediction number 4, which is exploration and drilling will rise.
Yes, around the world. The reason is in the junior markets right now, there's a lot of money coming into the market. And the key for investors is to separate between your innovators, your imitators, and hot dog vendors. Stay away from the last two.
A final thought from our guest, Marin Katusa, in a moment.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Gold Ray Resources Corp. is developing a gold mine in China. Identified resource, 175,000 ounces of gold down dip to the south of an existing 1,500 ton per day operating mill. Resource remains open down dip into the east and west. Trading symbol GOR on the Venture Exchange. Website goldray.com.
Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's Sterling.
Welcome back to the Money and Wealth Show. And with a final thought, this week's special guest, Marin Katusa.
I think it's so key as an investor to understand in the junior investing in both mining and energy, you have to focus on people, but also reduce your risk exposure by selling and taking what we call a KC free ride. And when possible, play with the house's money. And remember this one final note. Gold is the currency of kings. Silver is the currency of gentlemen. Barter is the currency of peasants. And debt is the currency of slaves.
Marin, thanks very much. Very provocative stuff. We do appreciate your coming by.
It was my pleasure.
And we appreciate your joining us as well. First, our thanks to Fritz and the crew here at Churchill's and the Holiday Inn in North Vancouver for the hospitality. We do appreciate your feedback. If you have some thoughts about today's show, send us an email to comments@themoneyandwealthshow.com. Until next week, I'm Sterling Fox.
The Money and Wealth Show, brought to you this week by American Manganese Incorporated.